Hello and welcome to another session of the My Solo 401k Financial, My Community daily webinar series. We're excited to discuss Robinhood Mega Backdoor Roth IRA, how to contribute $70,000 to a Roth IRA at Robinhood in 2025. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's first start out with some basics. So a solo 401k is a self-employed retirement plan. In other words, it's a 401k for a self-employed individual, someone that has no non-owner, non-spouse, full-time W-2 employees. So we are a solo 401k provider, and our plan allows individuals to contribute Roth as well as mega backdoor Roth contributions. So when one makes mega backdoor Roth contributions, one's really making what's called voluntary after-tax contributions. And the voluntary after-tax contribution limit is much higher than the standard Roth limit. So for example, if someone is eligible to set up a solo 401k and they set up a solo 401k plan with us, they could potentially contribute up to $70,000 or even more if they're age 50 or older for 2025 between Roth and or mega backdoor Roth contributions. So when one couples our plan with a Roth IRA at Robinhood, they could potentially contribute up to $70,000 as a voluntary after-tax contribution to the solo 401k, and then transfer those funds out of the solo 401k over to a Roth IRA, including a Roth IRA at Robinhood. So that's how one is able to potentially use the mega backdoor Roth solo 401k in conjunction with a Roth IRA at Robinhood. So now that we've given you a high-level overview, let's go into it in more detail in terms of how it'll work. So the starting point is that you, again, need to be eligible to set up a solo 401k. And then you need to find a provider like My Solo 401k Financial that offers a plan that allows one to make voluntary after-tax contributions and then an in-service distribution. So specifically transferring those voluntary after-tax solo 401k funds out of the solo 401k to a Roth IRA. So we, of course, offer that type of plan. We have deep experience with helping clients through the mechanical steps. So for example, you have to make those voluntary after-tax contributions to a separate voluntary after-tax account before they're transferred out of the solo 401k to a Roth IRA. Now, while that first step of making those voluntary after-tax contributions is not reportable, the second step of transferring funds out of the solo 401k to a Roth IRA is reportable on a Form 1099-R. And we handle that Form 1099-R as an optional free service. In other words, no additional charge. Clients just have to let us know when they transfer those voluntary after-tax solo 401k funds out of the solo 401k to a Roth IRA by completing a form on our website. That's how we capture the information that's needed to prepare the 1099-R. And then we add their plan to the queue, and we handle that again as an optional free service. So the steps specifically to convert to a Roth IRA at Robinhood are laid out here on this slide. So the first step is going to be to open a voluntary after-tax solo 401k sub-account. Now, Robinhood will not open up accounts for third-party solo 401k plans, but there's a lot of other good options. For example, we've helped clients open up accounts at hundreds of different banks, many different brokerages. And then one would then make a voluntary after-tax solo 401k contribution to that after-tax solo 401k sub-account. And we field questions every day from our customers in terms of how much they can contribute, just educating them on the contribution rules and how it applies to their situation. So we help them open up the account for those voluntary after-tax contributions. The contributions that are then deposited, they can be deposited from the business account or the personal account. Step 2 then is to convert those voluntary after-tax solo 401k funds to a Roth IRA. Now that Roth IRA could be at Robinhood, but it may be easier to transfer to a Roth IRA at the same brokerage where the voluntary after-tax solo 401k account is opened. So for example, if one were to open up a voluntary after-tax solo 401k account at Fidelity or Schwab, and then first transfer the funds to a Roth IRA at the same brokerage, for example, Fidelity or Schwab, and then open up a Roth IRA at Robinhood and direct Robinhood to go and retrieve the funds from the Roth IRA at Fidelity, this would allow those funds to then transfer electronically, because they would first transfer electronically from the voluntary after-tax solo 401k brokerage account at the brokerage, for example, Fidelity, to the Roth IRA at Fidelity. That would be an internal electronic transfer before they're then transferred again electronically via the ACAT system to the Roth IRA at Robinhood. Then finally, step 3, it's going to be important to let us know about that after-tax to Roth IRA transfer. So again, we can capture the information that's needed to handle the required 1099-R reporting. So even though the funds are after-tax funds, so they're not going to be taxable if there's no gains that accrue in that after-tax solo 401k account before they're transferred to the Roth IRA, it's still going to be reportable. And again, we handled that as an optional free service for our customers. Now, there is no deadline to transfer those voluntary after-tax solo 401k funds. There's a deadline to make the contribution, like all solo 401k contributions, but there's no deadline to transfer the after-tax funds to the Roth IRA. But folks typically want to transfer those funds sooner rather than later so that they can get into a Roth IRA account. They can start investing and growing on a potentially tax-free basis. So they'll grow inside that Roth IRA on a tax-deferred basis. And then if one is able to take a qualified Roth IRA distribution at the time of the distribution, then all the gains would also be totally tax-free. So here's a good slide that shows visually how it works. So you would have, for example, an after-tax account for the solo 401k, and then the funds would be transferred out of the solo 401k to a Roth IRA. And again, it could be first to a Roth IRA, say at the same brokerage where the account is open for the solo 401k before they're transferred through the ACAT system to the Roth IRA at Robinhood. Now, before we turn to the deadline, I want to stop and answer this question that's been chatted up. Thank you so much for bringing the question. So when putting money into a voluntary after-tax account and then moving it to the Roth account, is there a limit on how much you can move each year? So there's no limit on how much you can move from the after-tax account to the Roth IRA. The limit is how much you can contribute. So when you make a voluntary after-tax contribution, or I should say when you make a mega backdoor Roth contribution, it's a 2-step process. First is the voluntary after-tax contribution, which there is a limit to how much you can contribute as a voluntary after-tax contribution. Specifically, you can contribute 100% of your self-employment compensation, dollar for dollar, up to the overall limit, assuming you don't make any other contributions to the solo 401k. So for example, if you had someone whose business is taxed as an S corporation, their self-employment compensation is going to be equal to the W-2 wages that they receive from their self-employed business taxed as an S corporation. So they can contribute 100% of those W-2 wages, dollar for dollar, up to the overall limit. For example, $70,000 for 2025. But then there's no limit on how much they transfer to the Roth IRA. So let's say, for example, that someone is making contributions now in 2025 for 2024, because the contribution deadline is the business tax return deadline, including any time they filed extension. So let's say they had filed an extension for their 2024 S corporation tax return and had not yet made any contributions for 2024. Well, they could still make those 2024 contributions, those voluntary after-tax contributions, anytime up until September 15th. In other words, the extended tax return deadline for their S corporation tax return, their 1120S, here in 2025. And then they could also make 2025 contributions based on their 2025 self-employment compensation now in the same year in 2025. In that case, they'd be transferring funds from the voluntary after-tax solo 401k account to the Roth IRA for both years. But that's not a concern because there's no limit on how much you can move each year. Great question. Thank you so much for bringing it. And if you're finding this to be helpful, if you please like this video, whether you're on YouTube or LinkedIn or X, we would really appreciate it, as that'll help us to get the word out to other self-employed individuals, freelancers, solopreneurs, just like you. As you might imagine, there's a growing number of self-employed individuals. So this information could be super valuable to them. So we'd be very much appreciated. As well, if you subscribe to our channels, whether on LinkedIn or X or on YouTube, you'll also get notifications of when we go live. So we go live every day with 2 webinars, one in the morning at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. So we like to bring content to share, but also go over questions or topics that you want to discuss. So if you go live, if you subscribe, you get those notifications. You can jump on, ask questions, etc. Just hear what we're talking about. So thank you so much for the good question. So now let's go over the deadline to make contributions. So the deadline depends on different factors. One is, when was the plan set up? 2 is, how is the business taxed? So let's first talk about the category of customers or solo 401k owners that set up a solo 401k before the end of last year. In other words, they set up the solo 401k on or before December 31st, 2024, either with us or maybe a basic plan, like a solo 401k at Fidelity or Schwab. And now they want to upgrade to our plan to be able to make mega backdoor Roth contributions. So if the plan was set up on or before the end of last year and an extension was filed for the self-employed business tax return, so that would be the 1040 in the case of a business taxed as a sole proprietor, or the 1120S in the case of a business taxed as an S corp, or the 1065 in the case of a business taxed as a partnership, or an 1120 in the case of a business taxed as a C corporation, that individual who had set up the plan on or before the end of last year and filed an extension for their self-employed business tax return would have preserved the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by the extended business tax return deadline. So in the case of a business tax as a sole proprietorship, that would give them until October 15th of 2025 to make all types of contributions for 2024. And then for a business tax as a partnership or an S corp, that person that filed an extension and set up a plan before the end of last year would have until September 15th of 2025 to make all types of contributions for 2024. Likewise, for a business tax as a C corp, if they set up the plan before the end of last year and filed an extension, they would have until October 15th to make all types of contributions for 2024, whether employee, employer, or voluntary after tax. Now let's talk about a second category, which are people that didn't set up a plan either with us or somewhere else before the end of last year. So if you didn't set up a solo 401k until 2025, you could still make employer or voluntary after-tax contributions. You can no longer make employee, but you could at least make employer and or voluntary after-tax contributions for 2024, as long as you filed an extension for your 2024 self-employed business tax return. So if you filed an extension for your 1120 or your 1065 or your 1120S or your 1040, depending on how your business is taxed, you could still set up a plan here in 2025 and at least make employer and or voluntary after tax, in other words, mega backdoor Roth contributions for 2024. So that means if you have the self-employment income to justify it, you could still make a $70,000 voluntary after-tax contribution, or excuse me, that'd be $69,000 for 2024 because the overall limit was $69,000. But you could at least still make a $69,000 contribution for 2024 as an after-tax contribution, as long as you made it by your self-employed business tax return deadline and have the 2024 self-employment compensation to justify that contribution, and then transfer those funds over to a Roth IRA, including a Roth IRA at Robinhood. All right, well, that takes us to the end of the slides that we wanted to share. Thank you so much for the great participation. Please continue to engage. We have a community where you can participate 24/7. It's totally free to join. All are welcome. You can join at mysolo401k.net/my-community, where we have forums, a library of videos and webinars. We also have the industry's first AI, which you can use totally for free at solo401k.ai. It's a great way to quickly find resources, quick answers to questions, etc. All right, another question. When one transfers from the voluntary after-tax to a Roth account, it can be a Roth IRA or a Roth 401k. That's totally true, right? We're talking today about transferring to a Roth IRA because we're talking about how to contribute $70,000 to a Roth IRA at Robinhood in 2025. But you're totally correct. Those voluntary after-tax solo 401k funds, the solo 401k owner has the option to transfer either to a Roth solo 401k, keep the money in the plan, or a Roth IRA. It's totally up to you. Good question. All right, we'll give it a moment to see if there's any more questions. Thank you again for the great participation. Again, please like, please subscribe, help us get the word out. Please continue to engage. We appreciate the chance to discuss these topics as always. Looks like that might be it for today. Thank you so much, everybody. Take care now.